So this is what we're looking at, guys. We want to pay attention to this break point. So from 51s all the way down to 56s. Okay, we're looking at a $5 move, relatively quick. We're talking 40, not even 48 hours, 24 to 30 hours. And in essence, we've got a very aggressive $5 down move. Okay, now what I want to do is I just want to start off by getting the 60-minute footprint on. Now, the reason I want to show you this chart is very simply, if you've gone through the interaction of what's been occurring in the oil over the last week or two, what you would have noticed is that every time we've approached this lower bound, okay, this is that area I was talking about, the 49.5 all the way to 51. Every time we've come there, it's been a very aggressive move into it. In other words, high volume, high delta. Okay, so a lot of activity, a lot of interaction. Some would say that there's so much interaction going on that surely it's got to break this time. But in essence, what's happened is every single time it's had that aggressive interaction into the low, it's been bought back up. And we can see that because look where this candle closed. Okay, so every time it's come down to this level, we've seen that pretty much all the selling disappears and the buyers get aggressive and the market closes higher. And then we rotate up. So what we're looking for is the concept I'm going to talk to you about today, which is called the confirmed close. Okay. Now, I'm going to tell you just briefly what confirmed close is, then I'm going to show it just an example. But what we need to see on a confirmed close is we need to see all of this occurring. Okay. Now, very often on a breakout, you're going to see volume, you're going to see delta, but you're not going to see the price response. Okay. You have to have 1, 2, and 3, and only then do you have breakout confirmation. Okay, high volume and delta without price response is nothing. In essence, it could just be a fake break. Okay, so as a rule of thumb, there's one thing you can take away from today is when you start to observe the market and you start to create your rule-based approach for breakouts, you always need volume, delta, and a price response. Okay, so what we're going to pay attention to is where does this market give us access? At which point over the course of the month did it finally give us access? And I'm going to show you what that access looks like, and it comes on the 17th of December. So let's get back to this footprint. Now, I didn't mention this, but this is a 60-minute rotation. Okay, so each one of these is 60 minutes. Now, the reason I look at that is that way I'm able to identify what keeps happening on every single low. Okay, now I showed you this previous low, what happened. We bounced off very quickly. Notice the speed of rejection. Now, if you go back through the prior entire month, every time we've come back to this lower bound, you're going to see something very similar. Very aggressive move into the lower bound, very sharp reversals. Okay, now let's go fast forward to Monday and see what happens. So Monday comes in, nothing happens in the morning. Okay, a little bit of a bid up in the morning, nothing going on. Okay, null and void day. Suddenly we approach that first little area we're talking about, which is the 50-60. Okay, so that was the Friday low we're looking at. Now again, notice what happens. We come down to that 50-60, very big volume, not much delta response. Okay, but where does price end? Okay, bounces all the way back up. Okay, the very next candle, what happens? The market goes and it breaks below it, but what does it do? Price response again goes bid. So it's meeting 2 out of our 3 requirements, but the market does not want to respond in that price direction. The very next candle, same thing, keeps hovering around that 50-60, cannot sustain the breakout, right? But what we can start to see is steadily the market is now starting to accept lower prices. Why? Because we've got a series of lower high, lower high, lower high. Now again, if you compare that to the last couple of examples, you will note we didn't have this sort of price action where the market was actually sustaining lower high prices. Eventually, the market actually closes and confirms below that price point of 50-60. Okay, and that's our clue. Now, what probably made this very difficult, if this was day trading, I would like to think I wouldn't have made any money in this because it wasn't a straightforward breakout, right? Plus, it's happened at 7 o'clock at night, 7:30 at night. Now, I don't know too many European traders that will be trading at this point. Right? But notice what happens. Finally, it's confirmed. At 6 o'clock at night, it's confirmed that the breakout is now on. We're confirming price being closed at lower prices. Okay? And all of a sudden, the market snaps. Okay, we snap from, most of the afternoon we're trading around that 50-60. All of a sudden, we're trading all the way down to 49, 25s. Okay, 140 tick move. And that kind of now confirmed, right? The breakout's on. Obviously, there were longs still in the market, now they've been washed out. But we've officially now broken that 1 month range. Okay, so coming into Tuesday, we're looking for short side trades only. We're not looking to entertain the long. We don't want to provide liquidity. We are in a bigger time frame breakout. So we're looking at Tuesday. We're looking for trade opportunities. Okay, Tuesday comes. Market opens, balances for the first couple of hours. Now notice what happens again. Right? A lot of horrible two-way trade. No real price direction again each one of these 60 minutes. Okay, eventually 2 o'clock comes, the pit opens, and suddenly we start to see that price response. Okay, one candle after the other after the other. Volume picks up, delta picks up, and price starts to confirm to the downside again. Okay, now it's easier said than done. I know it's very, very easy to get, to be lazy and get a 60-minute chart up and go, oh yeah, I should have just sold it there. It was pretty straightforward. I just had to wait for the close. Right? We actually have to go and look at the, how we time these things, and that's why we then zoom in, a little bit of a shorter-term time frame onto a 5-minute chart. Okay, so let's go back to Monday. Right? Let's look at Monday. Let's see where it all began. Okay, now if you go to Monday, the price response, the price action shifted actually around 3 o'clock. Now remember, the breakout occurred at 6. But everything shifted and changed around 3 o'clock. That's where the net positioning started. In other words, there was net shorts that started to entertain shorts around 51.42 at 3 o'clock. Okay, market bounced back up. Secondary amount of shorts started. We can see the shorts re-entered around their 51.16 lower high. Again initiated to the downside. We know that because of delta, volume, and price response. Okay, market came back a third time. Again, made another lower high sitting around the 50.79. Right, so we could see constant lower highs where the sellers were engaging at lower and lower prices. Okay, and eventually, obviously, we snapped. Now, what we're looking for the next day is we're looking for an opportunity to be short. Okay, so what we've got to do is we've got to go find that point now where the market goes bid aggressively against the trend, i.e. against those shorts that are positioning. Right? So what we're ultimately looking for is we're looking for either an aggressive bid up in which we can sell to, i.e. sell into the rally, or we're looking for an aggressive amount of absorption. One or the other, but we want to find a point where the sellers enter so that we can finally, partake. Now, very early in the morning, we see the market snaps again, takes out the low, we get a bit of stops going, and the market then sits for the rest of the morning doing nothing. Okay, so I would like to think many traders would have potentially made something on this breakout, but not much, guys. Not easy, okay? The market's still not giving you an easy entry, right? Let's fast forward to later on in the day. Okay, so later on in the day, all of a sudden, what does the market do? It goes and it gets aggressive. Okay, it almost trends, counter trends, very aggressively with high volume, high delta, okay, against the market. There's our entry point. Okay, we can see the market comes up. We can see those sellers entering there, nice liquidity being provided, a second rotation of liquidity being provided, one last chance. Buyers have another go at higher prices, and the sellers respond very aggressively. We know that because notice where the rotation closes. Okay, so first the sellers were providing liquidity, then the sellers turned from passive to aggressive. Okay, as price went down, what do we see? Lots of absorption on both sides, but price keeps moving down. So we can see the sellers absorbed higher, were aggressive at the highest price. Now they're starting to be aggressive at lower prices. Okay, and the pressure sustains, and the pressure sustains. Okay, sell-off continues. We then get another bounce. So that same set of sellers have now re-entered where 49.60. Okay, so the previous day we had all that positioning at lower highs. Now we have another lower high in the market, 49.60. Okay, market bounces 49.20. Again, delta turns negative. So we've seen almost a series. If you were plotting, a series of prices and working out your resistance levels, we've already got 5 of them. A series of lower highs. Okay, these are all significant areas where shorts have been positioning Monday, Tuesday, and Wednesday. Okay, and then 2:30 comes in, the sellers come in straight line, and we see that pressure hold to the downside. Okay, now, I never want to make it sound as though it's easy. That's the wrong way to look at it, right? The first thing that's important is to be aware that the context was there. Okay, we've been talking about this trade for a while now, this confirmed close, looking for that confirmation, looking for the nuance shift, right? Monday wasn't easy. 6:30 at night, when it collapses, I promise you not many traders would have made money out of that, not unless you're an algorithm, okay? Tuesday comes in, sells off 8:30 in the morning, there's potential for a stop run, but other than that, no great opportunity. But there was that one chance, i.e. Tuesday afternoon we had an aggressive bid up against the rally. That was the opportunity, okay? If you're in the right frame of mind, the market gave you a chance, okay? But you had to be in a good sort of understanding of the nature and the structure of the market.